Hey, what's going on, guys? This is Daniel.
And this is Sam.
And we are
the Kwok Brothers.
And we've got a major issue on our hands. According to Wall Street Journal, we actually have 5.5 million units that we are in shortage of, which is kind of the problem that we've been facing in the last 12 to 18 months, which is a lack of inventory. It's been driving up prices to record highs. So Sam, what is going on?
So right now, obviously, we're in a massive shortage of new construction and remodel homes in the unit. In fact, the last 10 years, we actually haven't been building enough homes to catch up compared to what we've been building the last 40 years. And yes, home builder sentiments are higher historically for the last 10 months, mainly due to high cost of wood and also construction materials to be able to build the homes. But looking at the last 5 years of data, we are seeing an increase in uptake of new starts and new permits being pulled for construction of 5+ units and multifamily. So the problem of having 5.5 million units shortage has been more of a problem coming in the last 10 years, and it's almost like a perfect storm where now we're just realizing, holy smokes, there's not enough units, but couple that with the fact that the cost of wood is high and cost of construction is high, and the supply chain that's been shot due to pandemic, that has created a perfect storm.
Well, and that kind of leads us to today, Sam, where people want to lower the prices, right? People recognize these prices are artificially boosted. It can't stay this way forever. But what are we going to do when lumber prices are so high? The cost of copper, crude oil, even paint, right? And we're anticipating a lot of these things to continue to be in shortage as we move forward with 2021, and these aren't going to lower prices anytime soon, right? All these costs that are a lot higher, builders have to add on that yield and that margin. Otherwise, they're not going to be able to make their money.
Yeah, and there's also an equal problem to where certain homes can be built in certain areas, but the construction of building a home is higher or exceeds that of the market price. Meaning if it costs $200,000 to build, as soon as the last nail hits the building, now it's worth only $125,000.
Sam, there's actually a much bigger problem that nobody is addressing in our economy, which is that there are still folks watching this video right now who haven't clicked the like button. So click it right now.
So with that problem in hand, that leads us to another question is, why can't builders and investors and developers build faster and really meet the demands? Because clearly we're in a shortage and we need to make more housing units.
Well, I think one of the reasons, Sam, is because we haven't seen this much of population migration for a very long time. Think about this. For the first time in really the history of the United States, or really in the history of the world, people are able to work remote. Right? People our age, the millennials, think about where we're all moving. We're moving from places like Illinois, California, New York, and we're moving to places like Nashville, South Carolinas, really Carolinas, and Florida, Texas, Arizona. And I would argue that a lot of these cities that people are moving into, because, well, the millennials, our generation, we're not wanting to move from one major city to another major city and kind of have the same issues that we had with, the pandemic. We want to move to places that are more weather friendly, where we can work remote. Let's be real. And, a lot of the places that we're moving to, they don't have a lot of that infrastructure just yet. For that reason, a lot of times people want to see a lot more stability in population migration before big builders really start building.
Absolutely.
And well, here's another point that might be a little bit far-fetched, but it could actually genuinely be a really good point in about maybe 6 to 12 months, is that a lot of builders may be hesitant with this whole capital gains tax rate. Right? Because think about this, when you're building and you're constructing a home, you're taking something from the ground up, that's all capital gains, right? And if you're talking about capital gains tax rate increasing, I know for me as a developer, I'm a little hesitant to be able to go in and build something, especially if I know my tax rates are going to be astronomically huge. So again, that point, a little bit of a stretch, but in about 6 to 12 months, that could genuinely be a real scare for a lot of real estate developers across the country.
And especially from the fact that we need more housing unit, well, stuff like that, an increase of taxes would definitely disincentivize a lot of builders wanting to build for, especially these projects takes 1 or 2 years, and those are subject to capital gains taxes.
Exactly.
So as far as fiscal policies, the government needs to step out of the way and allow these builders and investors to go ahead and build without penalties and fees and taxes being imposed on.
So we have fiscal liabilities in terms of taxes, penalties. We also have market liabilities in terms of, well, if you're a developer and you don't know how long this housing market's going to last, what's kind of the incentive for you to start building right now, especially if your subdivision is not going to be finished for another 2, 3, 4 years. We don't know what the market's going to be like in 3, 4 years, but I'm willing to bet the prices are probably going to be lower than what they are today. And last but not least, of course, we talked about the population migration that has to yet to be stabilized.
Yeah, and one thing we touched briefly was the price of construction and price of commodities to build these units. Now, as you guys may have known or heard, price of wood has gone up significantly, but we did see the price of wood fall this month of June by 40%. And a lot of experts believe that this might be the new low, and we may see the price of woods go back up. while others say that we may see even more decreases as sawmills as well as supply chain gets restored back to the pre-pandemic levels. However, as we see wood prices fall and trend downward, where we're seeing other components of construction costs go up, such as paint costs, which is expected to go up anywhere between 6 to 40% increase. And that may be also a challenge to new home builders as well as remodelers.
So at this point, I'm sure some of you guys are saying, well, Daniel and Sam, you guys are all nifty with all this research, but what's the solution? What is your guys' solution on this? So here's the ultimate solution that we believe should happen in order for the housing market to finally be fixed with affordable housing. We believe that a lot of the money that goes towards municipality and fiscal, instead of having it go to stimulus checks or whatnot, we actually believe that the government should fund real estate developers to start building new construction. Now, here's ultimately why I believe that should be happening. Because for one, a lot of new construction developers are afraid that if they start construction now, the housing market's going to dip in 2-3 years. And for them, that's not really much of a comfort level, right? Imagine being able to raise tens of millions of dollars and being able to go to your investors and say, hey, we don't know when the housing market's going to dip or rise, but please invest $30 million with us and we'll just roll the dice. If you're the investor in that situation, you're not going to even talk to a single individual to wanting to invest into that project. And well, not only that, but you're also concerned about the cost of construction and where population is migrating. You have all these questions in your mind. And well, having the government walk alongside you and actually give you some incentive to be able to do that, well, it gives you a lot more insurance. It gives you a lot more safety, and it actually protects your investments a lot more. Now, guys, this is not a way for real estate developers to get rich. And we're not saying, oh, here in Daniel and Sam go again, typical capitalists wanting the 1% to get richer and the poor to get poor. Well, that's actually not true. Because Sam, wouldn't you agree that the more houses there are in inventory, the lower the value of those houses are going to be?
And it could be affordable by more people.
Exactly. So, I mean, it's pretty simple, right? The more things are, right? The more supply there is, the more it will meet the demand, and the lower the value of that supply gets over time because you're incentivizing the means of production in our local economy.
So our opinion is that ultimately the government has to get out of the way or either help the development of new projects, new inventory, new constructions. And right now, obviously, based on our research, we're seeing a lot more multifamily. In fact, we're seeing a 25% increase in new multifamily apartment building projects, which tells us that there's going to be a lot more renters that we can expect in the next 5 to 10 years.
Which of course leads us to say, if you're wanting to make money off of what's going on right now, well, let's think about it. We know that rents are going up, and chances are the housing market may dip in the not so distant future. And well, a lot of the millennial population are moving towards renting. So at this point, I'm sure you're asking, well, Daniel, how do I make money off of all this going on? Well, I can at least be honest in terms of and tell you what we're doing. What Sam and I are doing is we actually started a private equity real estate firm that's looking to develop and buy up a lot of things down south in a particular area in a state that starts with F. Right, let's just put it there, right?
Yes.
But for the sake of our investors, we're going to protect where we're actually building or where we're buying. We're focused on actually building mixed-use commercial and residential properties. So think multifamily class A with your diner in the bottom, your dry cleaners, a lot of developments that have actually everything all in one. So really kind of having an area within 0.2 square miles where you pretty much have everything you need. So you also have fitness centers, pools, and whatnot. And we're actually planning on building some storage units, some office complexes, and things that an actual growing economy needs.
Yeah, absolutely. And based on our research, we're seeing a lot of migration to this particular area. So obviously we're buying up land. Daniel mentioned we're building multifamily. And there's going to be a lot of demand like this in not only the area that we're looking at, but across the country, especially the Carolinas, Texas. We're seeing that in Georgia. We're seeing a lot of that in Arizona as well. So there's a lot of opportunities where you could participate. Even if you're out of state, you can partner with certain companies and organizations. And of course, if you're in those states, well, hey, it's in your backyard. So start taking advantage of those. And even if you don't end up building, things like a 200 unit or a 300 unit apartment building that, obviously that we're working on, you can participate in things like single family fix and flips. Right, buy these properties for $100,000, $200,000, $300,000. Add value to them. It's things that are complete, homes that are outdated, and update them with some of the newer appliances, newer construction materials, and sell them for higher costs. And right now, the housing market needs that. They want it. Again, we're 5.5 million units short, and out of the 5.5 million, it's not just only multifamily. but we're also in short of single family homes, especially millennials with kids and families that desperately need a single family. So there's a lot of
and also
ways to
and not only that, but also if you're worried that the housing prices are going to dip even after you start building, well, guess what? Travel's coming back. I would actually recommend putting that property on something like an Airbnb.
Right.
If you're RBO, it's a nice little side hustle to be able to self-manage, right? Maybe you can do it with the family. A lot of people are looking for those Airbnb spaces that, you know, they're very cute and very cozy, right? Very Airbnb feel to it. So these are some options that you guys can participate in and take advantage of with the next 6 to 12 months with what we're looking at in terms of the housing market.
I honestly think it's actually going to be more than 6 to 12 months. I think we have a window of, I think, 5 to 7 years. As we see, you know, you can't possibly have 5.5 million housing units be built in 1 year.
And another thing that we haven't talked about as well is the much bigger issue, and the biggest question that I have is, well, what's going to happen with inflation, right? What is the Fed going to do? Because, well, they said they have the tools to be able to fight inflation, but do they want to use it? Do they want to continue to kick the can down the road? Because you're only making the problem much worse.
But not only that, we're also eyeing the possibilities of the mortgage forbearance programs ending and how that may cause a spiral of foreclosures and short sales in the beginning of 2022. That may just warrant some opportunities for investors, but I don't necessarily think that's going to cause a massive crash or price dip. As we previously predicted, with the new data that we're seeing right now, we actually may see the prices continue to trend up, but not as aggressively as we've seen in the last 12 to 16 months.
Well, I think we got to be careful, Sam, because of course, with any crash, it's not just one thing, right? It's always just a flurry of things that kind of create the perfect storm. Well, I think between that and potentially a lot of eviction moratorium displacements, the inflationary issues that's happening, I think we got to be careful in terms of what's going on. There's still a lot of questions and things that need to be addressed.
Yeah, absolutely. So really, we still need to talk about this whole Federal Reserve and how that kicks in. And of course, we may see interest rates increase. Previously, we thought 2023. Everyone was talking about 2023. Well, now there's possibilities of 2022 rate hikes as well. That may have some impact on the housing market activities as well as new builders getting excited to build. I think it's really weird because we printed a crap ton of money. We're seeing a little bit of inflation. Yes, we need to see rates increase to offset some of that, but we have this challenge of, again, 5.5 million housing units shortage. Man, it's kind of a more like a tug of war, right? What do we need to do? Do we need to protect our dollar currency, or do we need to make sure that there's enough housing inventory to go around for everybody?
Well, that's definitely a question for another video. So with that said, guys, comment down below what you guys want us to talk about in the next video. Because, we're always curious in terms of what you guys want to hear from us. And of course, don't forget to like this video, subscribe to our YouTube channel, as we're looking to put out real estate investing content and also housing market content every single week. So for you guys, thank you so much for watching, and we'll see you guys in the next one.